So let's see if we can get an understanding of why these insurance companies have stopped insuring houses out in California since these wildfires are getting out of hand. Let's hit it.
Despite living in at-risk areas for wildfires, thousands of Los Angeles homeowners do not have home insurance. This disparity, highlighted by the current fires, is because several private insurers in California have either raised prices or have removed their coverage completely. For example, a spokesperson from the California Department of Insurance told CBS Money Watch that State Farm dropped around 1,600 policies in Pacific Palisades last July. That town now obliterated. State Farm telling CBS News, quote, our number one priority right now is the safety of our customers, agents, and employees impacted by the fires, and assisting our customers in the midst of this tragedy. Catherine Boudreau joins me now for more. She's a senior sustainability reporter for Business Insider. Catherine, thank you for joining us on this crucial topic. Help us understand what led some insurers, private insurers, to increase their rates or remove coverage from high risk areas altogether.
Thank you so much for having me. The surging costs from more frequent and intense disasters, coupled with the rising cost of repairing homes and the cost of inflation, has prompted a lot of private insurers to, like you said, hike rates on homeowners in states across the country, particularly in California, or drop them altogether. They say that the insurance market in California has become unsustainable, and that's why some homeowners are, are getting dropped, or in some cases might be foregoing insurance altogether.
So what you have to do is understand that insurance is a business. They're not in the in the business of really repairing lives. Not everybody. You know what I'm saying? They're in the business to make money. It's kind of like in the medical field. I've spoken on that about the insurance companies, how they change people's policies. They'll kind of con people into buying certain policies and not keeping the policy they used to have. I remember I said before, like years ago when I started, I used to work at a warehouse. I remember insurance. I might have paid like $100 something every 2 weeks for a whole family, and you had the option of getting like six different policies. But now insurance, hell, in the medical field is like 250. I think I paid like 252 something, like every 2 weeks, and it only covers like two people, and only get three policies that you can choose from. Because the thing about it is, what's sad is, you can pay policies for 10, 20, 30 years, your whole life. Something happens, your house burns down, flooding, um, who knows, someone dies, car accidents, whatever kind of insurance you got, then they'll raise your rates. They'll raise your rates like immediately because they're trying to recoup the money that they gave you, which is sad. So it's almost like you're borrowing. It's almost like credit. It's almost like you are paying them and they're holding your money so that when something happens, they will fix what happened with your money. So it's like, does it really make sense to get insurance sometimes? Because a lot of times you got to pay a deductible before they even fix anything. And that's something, if it can be something as small as a freaking hot water heater. And if you got like a tankless and it run like a few $100s, they'd be like, well, you got to pay, like, you may have an insurance policy, try to get a cheap policy. And they say, well, you need to pay $1,500 deductible before we start putting money into it. Well, then hell, you might as well not even have the insurance because uh you paying for the dang water heater yourself. And it's not like things are gonna go out all the time. Like things are gonna go out every day, like all the time, like repeatedly, to where it just, it makes sense to have insurance. Yeah. I always say that if I could get the money, have the money to where I can actually like afford to replace something if need be, I wouldn't get no insurance. Wouldn't get a policy. I mean, it seems cool. It sounds good. You do it when, let's say, you buy something and you're afraid that if it breaks, you may not have the money to repair it or to replace it. So you go ahead and get this little policy, pay a little few dollars a week, a few dollars a month, or what have you, so that if something happens to it, like cell phones, everybody, man, people, man, trust me, these companies have people who make good money, who do research on where the money is and how they gonna make money, how they lose money. So, for instance, you got like California. All everybody, if you've been around long enough, you know California had the two biggest things are earthquakes and fires, and you'll probably have them in certain regions. And so these insurance companies will be like, "Hey, if a house burns down, you have to say you have like if you have a massive fire like this one here, like these in California, like these in LA. Once this is all over and done with, and people's houses or whoever had insurance, the houses are rebuilt, if they didn't sell the property, those insurance companies are going to raise those rates. They're just going to because they can't lose money. They're in the business of losing money. So, which really means, let me finish this up.
Some are describing this as a home insurance crisis, not just in California, but in Texas, which deals with intense ice storms, in the Carolinas, which were recently flooded. Folks in Congress have attempted passing legislation that would address this, but yet it persists. What is the most popular
And
solution?
one place he didn't talk about was like Florida. And I was reading this article about the Florida insurance, and it says, this is from what? WUSF.org. It says Florida homeowners join rising trend, opting out of property insurance. Like I said, you got people who are dry. It's a recent study show that about 15 to 20% of Florida homeowners are uninsured. Experts say the risky trend is a direct result of the state's property insurance market crisis. So you got these places like Florida where they got these hurricanes, these floods, and they try to get the house insured. And you gotta make sure, do your due diligence. When insurance companies make a move or do certain things, you need to follow this. You need to follow along with them. Uh, if they're not insuring homes in California because of fires, certain areas, if they're not insuring homes in Florida in certain areas due to like flooding and hurricanes and wind and water damage, then you probably need to move out of there. And then you need to actually pay attention to your policy and see what is covered. Because it's sad when you hear that you get flood damage, right? But you don't get you have flood damage and you get paid for that, and but you don't get like your house repaired if a bunch of wind hit. If it was like a tornado, say if it was like a tornado hit your house, or a hurricane hit your house. There's a lot of wind and there's a lot of water too. So you mess around and your house get flooded, I get damaged, and stuff get, say a bunch of high waters come and knock a bunch of stuff out of your house and it's flooded. Well, if you don't have flood insurance, then you can't, you know what I'm saying? You can't make a claim. Now you can say, well, hey, the hurricane came and, tore up my house. That's where the water came from, the hurricane. Well, no, you don't have natural disaster. Flood is technically not a natural disaster. It's just that your house flooded because of a natural disaster, so we won't cover you. So you got to be careful of what kind of policy that you get if you get insurance.
And how long could it take before there is relief for homeowners?
Yes. Well, I think California in particular, they do have an insurer of last resort. This is what's known as a fair plan. And at least a dozen states have them across the country. In California, it's regulated by the state, but it's backed by private insurance companies. And unfortunately, these fair plans, while they are a last resort and a good option, they are more expensive and tend to cover less damage.
Kind of
So
like Cobra, when you lose your job and then all of a sudden you get these letters in the mail from Cobra so you can have insurance, and it costs way more than if you had a job. But it's like, hell, if you had a job, you wouldn't need Cobra. If you had that kind of money, you know what I'm saying, you could afford it, but you ain't got a job. So why the heck you gonna get that Cobra insurance? And then, like I say, it covers less, but you got some kind of coverage. Insurance is just a money grab, y'all.
you want to have more homeowners in the private market. And unfortunately, as companies like you mentioned, State Farm, Allstate, are dropping homeowners, they're increasingly turning to these fair plan policies. And then, maybe they'll search for alternatives on the private market, but they're becoming increasingly hard to afford and find.
And you may have touched on this, Catherine, but in our last few seconds, if someone watching is a homeowner in an at-risk location and their insurance is lifted, what should they do?
When you say their insurance has been dropped,
Yeah.
hopefully that if they haven't been able to find insurance, but in between the time that they've been dropped and this devastating wildfire, there is, I'm sure, FEMA assistance that's going to be available from the federal government. Unfortunately, that's not going to cover all insured losses, but that is designed to be a backstop as well.
Becoming a more common issue. We really appreciate your guidance on.
So I guess the goal is to somehow be able to have enough money, liquid somewhere to where that if you have some kind of disaster and you got an emergency, you have the money to cover it. I can't really imagine having a house, maybe purchasing a house and paid off or paying so much on it every month, and then it burns down and you don't have insurance, and then you got to figure out a way to pay for a new house. You may have great credit, you may have some money in the bank, but you probably don't have enough money to buy a house cash. And so you got to pretty much start over from square one. So that's like the dilemma of having insurance and not having insurance. Like I said, whether it's a house, car, it's like even a car, they make you have car insurance now, like at least liability. So if you get in an accident, if it's your fault, then you pay the other people and that's it. But then you mess around and they drop your coverage because of you got into an accident. But the ideal thing is to have enough money to be able to pay for whatever tears up or replace whatever you get lost or whatever is torn up. And like I say, houses are hard, cars are probably next down, and then any kind of thing you have personally. Like in your house, like computers, TVs, cell phones, stuff like that. You know what I'm saying? You really probably shouldn't get that extended warranty plan. Like I said, if you break, just go buy a new one. You should have money to be able to buy phones anyway. But the problem is, if you keep breaking them, you keep breaking phones, then the little coverage might do good for you. But other than that, hey, like I said, you got to understand insurance is a business. They're in the business to make money. Saw a story where I did a couple of days ago where a lady said that the insurance company called her while she was in middle surgery and wanted to know if that patient and what required her staying overnight or even having a certain procedure done. And the doctor was like, "Yeah, I already cleared that, with y'all." And he like, "Well, that's a different department. Well, y'all need to get together and talk." But they was want to see if she needs to stay all night, because if not, they would have discharged her. And I have plenty of patients who be in the hospital late one night. So you thinking, oh, they're not gonna be discharged until maybe sometime tomorrow. And they end up getting discharged that night. Like seriously. Like I had patients come back to a nursing home at right after midnight. Hospital let them go. Like, man, you gotta be kidding. But that's what it is. Insurance is the one who dictates what these, what these medical companies do when it comes to like procedures and medicine and things like that. Insurance company with these houses, they got, like I say, people that make millions of dollars who do research to see if if what kind of insurance should they offer in certain regions. Like I'm quite sure even if they do offer fire insurance in California, I'm probably sure it's sky high. And if like they offer flood insurance or hurricane, natural disaster insurance in Florida, I'm quite sure it's quite high because they know these things happen and they ain't trying to lose no money in this business. But anyway, tell me what you think about this story. Leave your comments below, share it with the world. Let's have intelligent conversation. You know how we do around here. Don't forget to like, share, comment, and subscribe. Those 4 things cost you nothing but maybe a couple of minutes out your day, but it means the world to us at this channel. If you would like to support the channel, financially, you can get super thanks, super chat, super stickers, and you can go to the description box or links there you can click on to help support the channel that way. And with that being said, I'll leave you in peace, and I'll see you on the other side.